Good evening, everyone, and welcome to the Futures Market Outlook for the week starting with December 3rd, 2018. Right now it is Sunday, December 2nd. It is 9:20 p.m. Eastern Time. And let's begin with our analysis. But before we start, I just want to make a quick announcement. Markets will be closed on Wednesday, and they will reopen on Thursday, regular trading hours. Moment of silence will be held tomorrow to honor former President Bush. All right, so let's get started with our market analysis. We're going to start with the E-mini Dow. E-mini Dow, impressive week after retesting the lows into the 24,260. Impressive rotation to the upside, took out the prior week's high into the 25,400, carrying the price higher. Today, we did have the gap up following the G20 meeting, gap up right into resistance into the 26,000. Let's move on to the daily charts. Daily charts, as you can see, trading into resistance into the 26. Still have plenty of room for a continuation higher, and 26,250, 26,300 is going to be the new target level moving forward. Let's move on to the 1-hour chart to see some more actionable trading ideas. So, as you could see last week, 2 trading days, we had a pretty wide range from 25,200 all the way into the 25, almost 500. Late on Friday, we broke out, making new highs, accelerating higher, all the way tapping into the 25,600. Today, we did have actually a couple hours ago, we did have a gap up. And as you can see right now, for the last 3 hours, we have been basing at these highs closer to 26,000. Like I said, if the momentum continues in the overnight trading session, a breakout may be possible over 26,000 that can carry the price higher into the 26,200 and 26,250. So still plenty of room for a continuation higher. Keep in mind that the market is already, the mini Dow is already up 451 points as of right now, but it still has the velocity possibly to move higher if we break above these highs. Let's move on to the mini S&P 500, and we're also going to start with the weekly charts. Weekly chart, also same dynamic. On Friday, we took out prior week's high into the 2750 zone. We managed to break above the 50 simple moving average and the 10 exponential moving average. Today, gap up again following the G20 meeting, tapping into the 20 simple moving average right here, but consolidating pretty bullishly on the hourly chart. Let's move on to the daily charts. The daily charts still have dynamics for a continuation higher back into the 2818 and back into the 2825. These are 2 resistance areas that price may react on, and further possible continuation higher all the way into the 2840 zone. Hourly charts suggest bullish range, 2797 for support, breakout over 2804 can again take the markets higher back into the 2818. And also back into the prior high that I mentioned, the 2824 and 2840. So we do look very bullish for a continuation higher as long as the new support level holds, the 2797. This is the first area of support, intermediate term. And also we will be considering the gap up support formed at the 2793. And also the mini S&P is up 44 points and a half at this point, 1.61%. Let's move on to NASDAQ. NASDAQ, and let's start with the weekly chart again. And the weekly has done a really nice rotation over 69.37 on Friday, accelerating at the end of the trading day in the last hour and a half of the trading day. The gap up carried the price higher, and now we have this really nice hook created by the 10 exponential moving average and also by the 50 simple moving average. Price velocity may take it higher into the 7,200 into the next resistance area. So we still have plenty of room for a continuation higher. Now, keep in mind that the NASDAQ is already up 137 points as of right now, almost 2% up. This is going to be the next area of resistance. There is also confluence area. This also represents a confluence area at the 2720. Let's move on to Russell. And Russell weekly chart, very bullish. We have the rotation and a continuation higher, obviously tapping into the 10 exponential moving average and landing into this cluster of resistance. Now, this is very hard to not, and this is actually very hard to ignore because the overall Russell pattern seems a little bit more weaker than the Dow pattern or NASDAQ pattern or even the S&P pattern. Right now up 22 points, 1.47% up. And obviously NASDAQ is the big winner, leading the way with almost 2%. We're probably going to see some gap ups in the tech stocks tomorrow due to this very bullish activity in NASDAQ. But anyway, so going back to Russell, Russell to me looks more like a bear flag here than anything else. And unless it trades over 1563 to 1565, I think that it's still going to be in a lot of resistance here. So it's a very delicate area. I think that if it doesn't break through this area, we can possibly see a turnaround. And don't forget that Russell pretty much has been the market gauge from February when we had the first volatility spike. So nonetheless, weekly chart, okay, bullish because we did get the rotation, a little bit of resistance here, also confluence zone. Let's move on to the daily chart. Daily chart tapping into very, very close to the 50 simple moving average at the 1564 zone. And again, it still needs plenty of propulsion here in order to start moving a little bit higher into this prior high. As far as target goes, the next resistance area is all the way into the 1589 zone. So again, it has to build and it has to gain a lot of energy in order to propel higher. So more energy than the three indices that we have just talked about. The hourly charts, obviously, they're all very bullish. They all are carbon copied with the gap up and pretty much a range within the last 2.5 hours. 1554 for immediate support, and if we get a breakout over 1558.5, we may have an acceleration higher. But again, be mindful of that 50 simple moving average that is very close by. It's actually almost 10 points away from where the price is trading right now, so into the 66 and 67 zone. If we navigate through that resistance area, like I said, there's still room for a continuation into the 1588. All right, let's move on to oil. Oil is also enjoying a very bullish night. Excuse me. In fact, a really nice continuation higher. And as we're speaking right now, it is spiking higher. So we're going to move to the weekly charts. So after 1, 2, 3, 4, 5, 6, 7 days to the downside, we finally have a doji and a rotation above 52.50. This is actually bullish. We still have a lot of resistance into the $50, but we still have a lot of room towards that $55 zone. All right, let's move on to the daily chart. Daily chart has just triggered above the 50 simple moving average. You could see the dynamic, the accelerated price action and how the 10 exponential moving average pretty much kept the price in check. This is the first reversal after a very sideways week that we've had. So this is resistance at the 52.56 zone. We are moving a little bit higher into the 53.76. And we may accelerate all the way into the 54.80. So still a lot of room for a rotation up, 55, and also back into the 5,600. And I think the $56 is going again to be a caution area for price, because We do have a pretty strong downtrend, and if the price is going to halt at this area and it's going to rotate back down, it might have more negative price action at the 56 level. But definitely, as far as the hourly goes, it is enjoying a really nice price action. And like I said, it has room to $55 to trade. So $55 is the next target zone for it. Let's take a look at gold. Gold has been, again, very, very sideways and very choppy. In fact, the weekly charts are very, very much sideways. You can see here that I have some alerts. And if we were to retest the 1218 zone, we would have definitely, and if we get more selling pressure at this point, I think we may have room for a continuation into the 1200 again. But if we build up momentum and if we trade over 1235, we may see a breakout that may continue higher back into the 46 and even higher, with higher targets all the way into the 70s. So this is something that I'm stalking. I pretty much like to see a break above last week's high, and this is going to create the dynamics for a higher price target. So 1235, 1236, break over this area. In fact, 1235 is the actual number, is the actual price, trigger price. So if it trades above this area, price velocity, it's very good for a swing trade for a continuation higher. All right, let's move on to natural gas. I received quite a few emails asking for natural gas analysis. And in fact, I'm going to start with the monthly chart here. And don't forget, we have brand new monthly candles. We have started a new month, and don't forget that this is one of the most dynamic months of the not only of the quarter but of the year. We have a lot of things that are going on. We have window dressing. We may have a Santa rally. We have the January effect, and we have a lot of things that are conducive for volatility in the market. Volatility, and I'm talking about the good volatility. All right, so last week we tapped into this almost to this $5 area, almost textbook into this prior resistance, into the 200 simple moving average. Now, the weekly charts, we're having pretty much an inside price action here. So we're trading inside this prior huge weekly bar. We still need to see some more. We still need to see some more price action, develop some kind of pattern, because so far we're trading within a very wide range, for all the way from $4 to $4.80. So we need the price to establish some sort of pattern here. So the first tap onto the 10 exponential moving average is going to be a start, and then depending on how this candle is going to shape up, and it's going to close probably in about 24 hours from now, we may have more information as far as price, whether it's going to continue higher or if it's going to continue lower. So I think that natural gas still needs to digest these new highs. And don't forget that, let me go back to the monthly chart. Let's not forget that the last time that natural gas was trading at this price was back in June 2014. So it was about 4 years ago. So it really needs to digest these new highs, this new revisited area. All right, so let's continue now with something that is also gapping up, and this is soybeans. Soybeans and wheat, even corn, they have gapped up. They're seeing a lot of momentum. All right, monthly chart, full rotation above since September. So we had a pretty flat October. November was a little bit bullish for soybeans, and now we're having the gap up. So monthly momentum may continue higher all the way into the 950 zone. Weekly chart, obviously trading not only above the first area of resistance into the 897, but also trading above this whole entire resistance area from this summer. So July and August month. So right now, this July and August is going to create a shelf of support moving forward for price. So 909 is going to be seen as a support level for a possible continuation higher. Daily charts, again, it still needs to pretty much dissolve this right-hand side resistance, but the fact that it is trading right now into this area is digesting this area, and we may see a rotation higher back into the 960s. So it's looking pretty good. Something that I have on my scan is wheat futures. Wheat has been consolidating for a very, very, very long time. This is the daily chart. Let's move on to the monthly chart. Monthly chart is very constructive. I really like to see wheat trade over 527. I was watching it before it rolled into the new contract, and I really like the way it is trading here into this area. I'm going to watch it very closely as it's moving forward, because I think it really has the potential to run into the 550 and back into the 580. So it's moving out really well. Two more. We have heating oil that I want to review very, very briefly here. This is the monthly chart. You could see that last month, all the charts have been very damaged in heating oil and RB, gasoline, and also in crude. We have a big, big, big white bar. Still not sure if the price is going to rotate, take out these highs, and it's going to start uptrending again. But anyways, the monthly chart has a very, very damaged pattern to it. So it really needs to build up in order to confirm some sort of price action. Weekly chart, though, weekly chart looks way better on heating oil than anything else. And if it's going to trade, and actually this is something that I'm going to have on my active watch, 1.91, this is going to be the trigger area. Actually, it's going to be 9.2. I'm going to set the alert here into the 9.2 zone. Okay, let's just set it here. All right, just a bit below, so we have reaction time. Okay. So this is going to be the area that is going to be on my watch for a potential bullish move into the 194, into the $2, and even into the $2.04 here. So we may see some short squeeze price action. Also, RB, here it is, gasoline. You can see beautiful already has triggered a weekly reversal into the 1.4639. And it's already trying to accelerate higher. So we're going to watch it first thing. Also very bullish 4 hours. I'm going to move to the daily chart here, so you can see that pretty much all these energies have had a really flat week, and now we're just breaking above, and the dynamic looks higher. So even the hourly chart, you can see 1, 2, 3 continuations for the last 3.5 hours, very dynamic move to the upside. This is all for now. I hope you have a great, it's going to be a short week. We have Monday, Tuesday, and then we have Wednesday. The markets are going to be closed. The trading room is also going to be closed. And then we have 2 days left, Thursday and Friday. And that's going to wrap up the first week. Keep in mind, we still have a lot of releases going on this week. We have a lot of economic events, and we still have some earnings that are coming out that are pretty important, and we will continue to discuss in our trading room. So thank you so much, guys. I hope you all have a very good and profitable week, and I'll see you on Monday in the trading room. Have a good night.